Welcome back to the CryptoWorld channel, everyone. My name is Josh, and right now we have just seen a brand new Bitcoin signal that we must pay attention to. And this is happening while the Bitcoin market is plunging further into extreme fear. And interestingly enough, we are seeing the Bitcoin short positions close according to these two indicators. So I'll be talking about all of that and more later in this video. But first, let's take a quick look at the 4-hour Bitcoin charts. And first of all, when you're taking a look at the Fibonacci retracement tool from the 34.3k low up to the $45,000 high, we are currently running into the golden pocket, the most important Fibonacci level, coming in at around 38,500, and that is actually going down towards around 38,000 because of course the golden pocket is actually a price range. So the first significant range of support in the shorter term is once again at around 38 to 38,500, and anything below that I'll be looking towards this previous low, which is also coming in pretty close to this 78.6% Fibonacci level, coming in at around 37,000 approximately. And if you're looking in the 4-hour RSI, technically we are still trending to the downside, and the 4-hour MACD is still sitting in the red. So we certainly have not confirmed a bullish reversal in the shorter term for Bitcoin, at least not just yet, because if you're looking in the 4-hour RSI, currently we are sitting right on the edge of oversold territory. So of course, if we go any lower, then obviously Bitcoin would be oversold. And the last time that we saw that on this 4-hour time frame was back around 2 weeks ago, just as we were forming that bullish divergence, which led into a shorter term bullish trend in the Bitcoin price. So it's totally possible that Bitcoin could bounce from this level of support, but once again, in order to confirm another reversal, we need to see some more confirmation, like some of these other indicators start flipping bullish again. And if you're zooming out to the 12-hour Bitcoin charts, of course, the parabolic stopper reverse indicator is still sitting in the red, as it has been doing for the last couple of days. But what we have only just seen over the past 1 day is a bearish cross in the 12-hour MACD, and the last time we saw that happen was around 3 weeks ago, right back here. And if you're looking at the price action at that stage, we still had around a week and a half to 2 weeks worth of bearish price action before we started to see another shorter term bullish trend that lasted for around a week. So basically, if you're talking about these shorter term trends in the Bitcoin price, these ones that normally last for around 1 to 2 weeks approximately, then it is pretty obvious that we are at least in some sort of shorter term bearish trend. And of course, for those of you that have been watching the channel over the past 3 to 4 days, I've been talking about this as a possible risk for Bitcoin ever since this point right here around 3 to 4 days ago. Now, with that being said, the Bitcoin Fear and Greed Index has just plunged further into extreme fear, and more specifically, right now this Fear and Greed Index is at 22, and if you're looking at where this index was just 1 month ago, we were sitting in extreme fear at around 20, so very close to what we're seeing right now. And if you take a look on the chart to the last time that we saw that extreme fear just around a month ago, that was right around here, and obviously at that stage more bullish price action wasn't too far off, so that is something to consider as well, because basically as this Fear and Greed Index goes further into extreme fear as it approaches zero essentially, then it becomes increasingly likely that the Bitcoin price is approaching some sort of short-term bottom at the very least. And we can also see a similar type of signal over in the Bitcoin funding rates, because right now the majority of funding rates, not just Bitcoin actually, are currently sitting in the negative at the time of recording this video, which basically means the Bitcoin short positions are paying extra money to the Bitcoin long positions. So technically speaking, negative funding rates is a bullish signal on the price, just like extreme fear, for example. But just keep in mind that these two Bitcoin signals don't necessarily have an immediate impact on the Bitcoin price. And what is very interesting is if you're taking a look at the percentage of Bitcoin short positions on the Binance exchange and the Bybit exchange, only just yesterday we saw a decrease in Bitcoin short positions relative to Bitcoin long positions on these two major exchanges. So if the Bitcoin funding rates stay in the negative for today, then it's likely that we'll see this chart update by tomorrow, with the short positions potentially increasing. And believe it or not, the more short positions that are in the market compared to long positions, especially on these two major exchanges, the more bullish the Bitcoin price is about to become. We saw this happen back in October 2020. We saw a massive amount of Bitcoin short positions relative to long positions on these two major exchanges. And at that point in time, that was just before a major surge to the upside in the Bitcoin price. And then it was only when the Bitcoin short positions were very low at these record low levels. Technically speaking, that was more of a bearish signal for Bitcoin as we were starting to top out here. And then after the Bitcoin price crashed during May, we saw a massive increase in Bitcoin short positions, which stayed at those relatively high levels all the way up until around October 2021. And obviously during the majority of that time, that turned out to be a great buying opportunity to be involved in Bitcoin. And then just as we saw a major decrease in these Bitcoin short positions down towards these record lows once again, that was right around here and turned out to be a pretty good time to take some profits off the table. And then after the Bitcoin price has already played out this major drawdown, right at the January bottom, we saw a massive increase in Bitcoin short positions relative to long positions, which is very similar to what we have seen at previous Bitcoin bottoms. So basically, according to the Bitcoin short positions on these two major exchanges, the absolute best times to buy Bitcoin are any time the short positions are at really high levels, and then the best times to take some profits off the table have been when the Bitcoin short positions are at these really low levels. And obviously, over the past 1 month, the Bitcoin short positions relative to long positions are still at really high levels even right now, especially over on Bybit. So it will definitely be interesting to see how this plays out moving forward, and of course I'll be keeping you updated every day here on this channel. But if we're looking here on the daily Bitcoin chart, I want to make it clear that we do not confirm a significant reversal on the larger timeframes until Bitcoin can finally see a confirmed break above 45,000. So if you're wanting to know important levels of resistance, that is really the most important level that we've got right now, once again at around 45,000. And if Bitcoin can see a breakout above 45,000 on the 3-day Bitcoin chart, the price oscillators are already set up ready to go, meaning that they're already pointing in the bullish direction. For example, the 3-day MACD is sitting in the green and the 3-day RSI is technically trending to the upside. And if you simply take a look at the last couple times that this has happened, that was also bullish for the Bitcoin price on these larger timeframes. But as I just said, none of this will obviously play out until we can at least break above 45,000 first. And something else to pay attention to is the US dollar currency index, because if this is bullish, technically that is a bearish signal for Bitcoin. But then if the US dollar currency index is bearish, that is bullish for Bitcoin, just like the end of 2020 leading into the beginning of 2021. And what we have seen over the past couple of days is a major breakout in the US dollar currency index, which is technically not good for Bitcoin. But with that being said, the RSI on the daily chart and the 2-day chart is entering into overbought territories, which means that the room to the upside could potentially be limited. But of course, a lot of this movement in the US dollar currency index comes from external forces outside of the charts, such as what's happening between Russia and Ukraine, because of course the Russian ruble, Russia's national currency, has been absolutely crashing against the US dollar, which has helped the US dollar flip more bullish again, especially recently. And while the US dollar currency index is somewhat bullish, that is also technically a bearish thing for the stock market. And we did end up closing yesterday's daily candle as a red candle, but with that being said, we saw a decent wick to the downside, which shows a decent amount of buyers stepping into the market at this exact level of support in the S&P 500 index on the daily time frame. And of course, we still have this bullish divergence in both the S&P 500 and the Nasdaq 100 on the same daily time frame. But anyway, if you made it this far in the video, you might as well leave a like down below. And if you're new to the channel, be sure to subscribe with notifications turned on for more updates just like this every single day. And before you click off, you might as well check out one of these uploads if you haven't already. I've got a full trading tutorial video and a passive income video, which both show you ways to make more money in the crypto markets, whether or not prices going up or down. But anyway, that is it for this update. I really hope you enjoyed, and I'll see you all in the next video.